Welcome back for another top-notch video. This week, guys, we're going to talk about the week of August 3rd through August 7th. As always, our top-notch channel is about TSP and Roth IRA brokerage accounts. We talk about how to improve your retirement accounts if you're in government or you use a TSP account for those funds. We talk about the C, S, I, and F funds. If you are a brokerage Roth IRA, one of those folks, we talk about the ETFs IVV, VXF, EFA, and AUG, and of course these equal each other. That's going to be the S&P 500. This is going to be small caps, it's going to be international markets, and the F fund or AUG is going to be bonds. So we like to do kind of a broad stroke overview of our funds, take a look at some of the market news, what's coming out, where we're going in the future, and then do a technical analysis on all of our funds. If you guys are interested, please like, subscribe, or share. Really appreciate you guys watching the channel. So with that, let's go right into our numbers for Top Notch. For Top Notch, this channel, we are sitting at 4.32% for our return this year. That's pretty good. We have positive income. We are in the green. If you notice on the basically on our channel, we have been up for the last 2 months. So for July and August, we have been up, and 4.3 is pretty good. If you look at the charts here, this is the C fund or IVV, VXF, or the S fund here, and and the I fund, which is EFA, and we are beating the S fund and the I fund here, so we're doing very well there. Almost the same with the C fund. I'm just a little bit behind on bonds or the F fund or AGG. Hoping to catch that in the next month or two. We should be close to catching the F fund. We're hoping for that, and then we're on the very just the tail end of tracking the C fund right now as we speak. So that's our funds where we're sitting at, doing very well for the Top Notch channel, and we're just excited to see what we can do for the rest of the year moving forward. Like I mentioned, these were our charts for this week / month / year. As you can see, the F fund is doing the best here at 7.7%, with the C fund right behind it at 4.8%. For this week, we did see a very positive week, almost a gain of 3 our top gainer was the S fund with 3.5% for the week. Did very well. We do have quite a bit of funds in that. We didn't get in right at the beginning of the week. It was kind of the new month, and we kind of held off for the first 2 days. Wish we'd have jumped in right away. We ended up jumping in on Tuesday night, getting in on Wednesday markets, and we wrote it out for the rest of the week. But markets did very well. We have some really big news in our technical charts for you guys moving forward. If you guys like to see it at trends based on the charts, see where's our funds for the week. As you can see towards the beginning of the week here, funds really took off on August 3rd and August 4th. Really good gains all the way up to 2% there, and then kind of tapered off as we continued on. That S fund really rocketing it up for the rest of the week. And then the C fund was doing just a little bit worse, and then the I fund just a little bit below that. But our 3 stock funds were doing very well for the week, whereas the F fund, as you can see, was sitting close to 0 throughout the week. Moving forward into some of our commentary. What do we have for commentary for you guys this week? Tom does commentary for you guys he does commentary for his TSP Talk channel. If you guys are interested, please go check out their website. They do a lot of really good stuff there. Just like to look at some of the stuff that they have here. Thursday's charts does not have Thursday's or Friday's close. As you can see, the S&P 500 is sitting above its trend line here, doing very well. We have 2 small gaps in here moving forward, but we did break out of that trend line. It's holding above that. That's a very exciting thing for the S&P 500 or IVV or the C fund. Small caps, S fund or VXF, also broke above its trend line here, doing very well. As you can see, we have an open gap down here. We'll have to see what happens with that. The I fund still below its trend line here, but it's moving back up to where that was its close was. That nasty week we had last week really recovered quite a bit from that, and we'll have to wait to see where it goes from there. And then of course we have bonds. Bonds is continuing to tick up in this great fashion ever since we've seen since I would say March, April, May time frames. Really just rocketed up here, as you can see. Good place to be if you're not going to be in stock funds. I'd recommend being in the S fund the F fund over the G fund for your TSP users. The other thing I wanted to show you guys was some commentary we had here for Grow My TSP. They have basically just some charts here of what's going on with the CS and I funds. As you can see, the 9-month daily charts here. RSI, which is the indicator they like to use, is doing well. Typically, when it's in here above the middle line, not above this line here, that's really good, kind of the area you want to be in. If it tops out, it tends to go down a little bit here. As you can see, price moved down when we topped out. When we top out here, usually price tops out as well. But right now, we're right in that sweet spot. Good place to be. MACD, which is another indicator they have, has tend to be flat, which that means is when the black line's above the red line, typically charts or price, which is price up here, tends to increase. MACD looks like it's getting that black line, is moving away from the red line there, so that is good for the C fund. As far as the S fund goes, we're looking at the same thing. Sweet spot for RSI. MACD is just black line's just barely a little bit above that, which is good. Hoping to see that move above in the future. And of course, we have the I fund or EFA, international markets. Little different picture here. As you can see, sweet spot for RSI, but our indicator for MACD is trending down. We have that black line below the red line. Seeing some resistance here all the way since the beginning of June. Haven't been able to see that breakout. Not the best fund to be in over our stock funds compared to our other funds in the near future moving forward. That being said, if you guys have any questions about that stuff, please let me know in the comments below. The last thing I want to bring up is CiovaccoCapital channel. They have some really interesting charts. Check out their YouTube channel if you're interested. One of the ones that I found really interesting for this week was the S&P 500 monthly chart, which is 2019 to 2020. As you can see, they have MACD here for a monthly chart. When the black line crosses on this chart, when the black line crosses red, that's when price tends to decrease. When it crosses again, that's when price tends to increase. Very long-term charts for what you can see here. And back in February time frame, we did see a cross in the negative, very bearish sign for a monthly long-term chart. And then back in July, we saw it cross again for a bullish sign moving forward, and price reacted pretty strongly to make that happen. So that's a very good thing moving forward. They basically asked in the last 70 years how many times has this happened in such a short amount of time. And on their charts, as you can see, it's happened quite a few times here. So it's happened quite a few times, and what happened next when that happened with MACD closing above that line. As you can see, in the months that followed from that closing, which that closing happened for us just a month ago, back in July. What happened 6 months, 1 year, and 2 years out? As you can see on these charts here from all the cases they have prior, we had 100%, 100%, 100% positive in the green gains moving out the next 2 years for a long-term basis. That's a really good chart. Now 3 years, 4 years, we had some things change up a little bit. The percentages drop off a little bit. But for the next 2 years, that's a really good sign, guys, for the next 6 months, 1 year, and 2 years for charts moving forward. The only other chart I wanted to show you was this unemployment chart. A lot of times in the news we see, unemployment, workers flying for unemployment. But ever since the March timeframe, March-April timeframe, end of March-April timeframe, we've basically seen a decline of workers filing for unemployment pretty significantly. As you can see, really, we saw a little bit of an increase towards the back end of July, and then in August 1st, we just started to see this decrease once again. So that's a really good thing and better to be expected for charts. Now let's move into our technical analysis. The 4 charts we like to look at, of course, are our stock funds for TSP and Roth IRA users. First thing we like to move into is IVV. Here we are with IVV, or the C fund. This is going to be the S&P 500. As you can see, all the indicators are moving in the right direction. Moving averages are all in the right direction for a bullish sign. Our trend lines are picking up here. Very good trend lines moving forward. We're getting very close to that high we had back in February. Some people have been talking about a double top. We'll have to wait and see what the long-term charts say about that moving forward. But this is a very positive sign. If you stayed in your positions with stock funds ever since the beginning of the year, you should have more money if you were contributing in here for May, June, July time frame. You should have more in your account than than what you lost back in here in the February, March time frame. And as you can see with our charts, we have definitely gained money for the year on the Top Notch channel. We're up 4.3% for the year, and as you can see, we've gained $3,400 for the year. So we're doing very well on our channel Very happy with where we sit for the top-notch channel. Where we see things moving in the future on this, well, let's take a look at the technical analysis for IVV. This is long-term charts, weekly charts for IVV. The two indicators we'd like to look at, as you can see, we have price up here with some Bollinger Bands, and down here we have the derivative oscillator, which is these blue and red bars. Basically, in the blue bars, or I'm sorry, green bars. When the green bars are moving up, price tends to increase. When the green bars are moving down into red bars, price tends to decrease. When the red bars are moving up into green bars, price tends to increase. When they're moving down, price tends to decrease, with the exception of this little right here. We saw the increase here for the derivative oscillator. The only other thing we like to look at to keep it simple is the PPO line. That's this blue line above the moving average line, kind of like MACD, same thing. When the PPO line drops below the moving average line, price tends to decrease. When it moves above the moving average line, blue above red, price tends to increase. Here we have two very good indicators. Both our indicators are doing good things on a long-term basis. We have our derivative oscillator, which are these green bars. They were moving down for a significant amount of time, and then they started to move just back up again, as we can see here with the indicator. So with our derivative oscillator, as you can see, we are dropping here for a while, and price was not reacting to that, which was really interesting. We went from a 4.3 to a 4.1 there, to a 4.1 here, and then a 4.6 here. So that's a huge increase this last week. That's a very positive sign. That's what we've been looking for to stay basically stocks for the long term. Very, very good sign. That's a fake out. Usually we don't see that. Typically we see green to red and then red to green. Here we saw a fake out, so we're looking for good things for the next 4 to 6 weeks. Short-term basis, next 2 months. Really good things for IVV or the C fund. We are invested in this fund. Short-term basis for IVV or the C fund. As you can see, the PPO line, which is that blue line, is above the red line, which is our good indicator. Starting to move down here a little bit. We had one heck of a week here. Stocks really took off here. As you can see, we went from basically the 323 for price to 335. That's a huge move for the C fund or the S&P 500. And we're hoping that we see a fake out here moving forward, going with those charts. So let's move into our next chart, which is the S fund small caps or VXF. As you can see, very similar to the C fund. The indicators, moving averages are all in the bullish manner here. Very good. We see a trend line drawn here. We're hoping to see it break out of that trend line moving forward. Could come back and test these lines. We'll have to wait and see what happens. Moving to our technical analysis for VXF. With VXF on a long-term basis, another really interesting sign here, guys. As you can see, our derivative oscillator was dropping here. We went from 4.1 to 3.66 to 3.4 to basically 3.7. Huge jump in here. Big sign for us as technical investors. Looking at our two signs here, our two signs are now green, good to go. We are able to get back into charts. We did move some capital into these funds. Moving forward, we're looking forward to our charts for the next basically 2 to 3 months doing some good things. They've already been doing some good things, but now we have the technical analysis also following suit, our PPO line and our derivative oscillator. Where do things look on a short-term basis for VXF? As you can see, that derivative oscillator is falling a little bit. A little concern there. PPO line is still above that red moving average. Still doing just fine going forward. Moving on to EFA. With EFA, what do we have in the charts? As you can see, EFA has been struggling a little bit more. Indicators are starting to look a little bit better here, but we still don't have that 50-day moving average above the 200-day moving average, which is concerning. It fell out of its trend line middle of July, has not been able to keep that trend line like our other two charts. Not as good looking chart as our other two charts, so we've just been kind of staying away from it. On a technical analysis, long-term charts for EFA, where do we stand? As you can see, that derivative oscillator still has not turned around. We went from 3.3 to 2.8 here. It has not turned around here. PPO line is still above there, so that's good. Price is starting to kind of consolidate a little bit here. We saw a spinning top here, meaning indecision. I would just stay out of EFA for right now if you are invested in the market. Stay in that CNS fund or IVV VXF area. If you are more of an older investor or you want to mitigate risk, how do bonds look right now for AGG or the F fund? Where we're sitting at, as you can see, very small decline, incline all the way up here into August. Doing very well here. No issues, concerns. We don't even have any trend lines drawn in here. and the moving averages are all in the right direction. I would just be cautious. This has been moving up for a long period of time. Again, this is one of our best performing funds for TSP at that 7% rate right now. Where do we sit on a technical analysis for AGG? Here we are on a technical analysis. As you can see, had a fake out here back in mid-July. Ended up working out really well here when we, like our other two charts, saw that derivative oscillator start to increase about July 2nd or 3rd. We went from 0.9 to 0.97, 0.91 to 0.97 here, and has increased ever since for the last couple weeks here. Could start to see this start to decline. You see this PPO line, the blue line, starting to get closer to our red line. Haven't really seen a top out with the derivative oscillator, and just constant moves up here with our weekly chart. Where are we sitting on a short-term chart for AGG or bonds? One thing we did not like to see here is our PPO line is below our moving average, and our derivative oscillator just did a negative fake out here. We went 3.33 to 3.39, and that is in the negative. So I would just be cautious with AGG moving forward. It has been consolidating, slowly moving up for most of the year. We could start to see that move more down now that stocks have the upper hand. We'll have to wait and see where things are, but people tend to shift when they see technical analysis move back to stocks, start to send more assets, pull more assets out of bonds, move them back to stocks. So just be aware of AGG moving forward. Not a bad place to be still. I would just watch it. I would watch this. If you're in AGG, I would be more towards the G fund versus AGG right now for protecting capital for our TSP investors. Not a bad place to be long-term still, but just keep that in mind. That is basically all of our charts for this week, guys. Really appreciate you guys paying attention, and if you have questions, please write those below. Please like, subscribe, or share. As always, the Top Notch channel, where we're sitting for the month. As you can see, we are sitting in the CNS fund. Both those long-term weekly charts look really good to us. So we are sitting with a 60% in the S fund, 40% in the C fund. The reason we did this is we want to catch back up to that C fund, get above all our stock funds for the year, put a little bit more risk into that S fund, which should grow hopefully a little bit faster than our C fund moving forward. And we are 100% invested in stocks, having a really good feeling for the rest of August, September, and October moving forward. That's another top-notch video. We'll see you guys next time.